How's it going, everybody? It's Stas here. So the stock market did very well today. Yet again, the S&P 500 up $14, up almost 0.5%. The Dow Jones went up $92, up almost 0.4%. And the NASDAQ went up $62, up 0.6% on the day. And in this video, we're going to be breaking down the markets a bit further, going over some technicals, and going over the reason why the markets went up today. We're going to break down the jobless claims numbers, as well as the jobs report numbers, and we're also going to go over what I personally did in the markets, as well as the top stocks that I'm watching and looking to trade as we're heading deeper into the month of July here in 2020. So if you guys find value in the video, as always, hit that like button for me. Let's try to get 400 likes on this video. Consider subscribing to the channel and check out all the free links down below in the description box if you want 2 free stocks from Webull, one of them valued up to $1,400. And if you want to be further connected with the Strive Smart community, again, all of those are linked down below, and they're all free of charge to join. So let's get into the video, starting off with the S&P 500. And if you guys watched my video yesterday, we talked about a pivotal point in the S&P 500, on the S&P 500, at around 3120, right? And mind you, we actually closed right under 3120 yesterday. And would you take a look at what happened today? The bulls got us right out of 3120, and quite honestly, the bulls got us out of 3150, which was another big resistance that we were watching yesterday, and honestly, over the past couple of weeks here, and not over the past couple of weeks, more like the past week and a half here in the stock market. And notice the S&P actually held 3120 as a support heading into the close of the market, which gives me further reason to believe that the bulls won the day. And overall, guys, we can see that we're still struggling at around 3150 a bit, although in the morning, again, like I said, we did break above it very briefly. So for next week, what I'm looking at is whether or not the S&P is going to maintain 3120 as a support, right, like it did at the close of the market today, and whether or not it's going to fill the gap and break out of 3150. And take a look, above 3150, we might be going back to 3220, which is the level that we topped out at back in the beginning of June. And we also talked about yesterday how the markets really haven't been moving too much over the past couple of weeks. I mean, the markets have been very volatile, right? Don't get me wrong on that part. The markets have been very volatile, but if you take a look at where we were on the 3rd of June, which was a month ago on the S&P, we're pretty much flat. We were trading at 3127 about a month ago, and now we literally just closed at 3130. So flat on the S&P over the past month, but again, we broke 3120, we broke this wedge to the upside, we broke 3150 momentarily, so the bulls are getting momentum into this long weekend. And by the way, tomorrow, Friday, the stock market is closed as it is 4th of July weekend here in the United States, right? So for next week, watch for that pop up to 3,200, and quite honestly, with the jobless claims numbers, well, not really the jobless claims numbers, but the jobs report numbers coming out very good, beating expectations, I think the bullish momentum into next week will continue. So before we get into the Dow, into the NASDAQ, let's talk about jobless claims and the jobs report very quickly. I have some notes here on my phone. Jobless claims came in at 1.427 million, and that actually beat the estimate. Estimate was around 1.38 million, and the markets, quite honestly, they don't really react too much to these numbers anymore. This is the 15th straight week of over 1 million jobless claims, so the market is kind of desensitized to these numbers at this point, unless it comes out as a huge surprise. Let's say today we got 3 million jobless claims with 1.3 estimated, then that would be a pretty big shock to the market. But as long as the numbers are in line with estimates, it's not too much of a surprise anymore that we are getting 1 million jobless claims every single week. The markets, again, are pretty much desensitized to that. And where the markets rallied are, again, the jobs report numbers. This is what the markets ran on today. U.S. added 4.8 million jobs, more than economists expected. And if you guys watched my video yesterday and the day before, we talked about how economists were expecting 3 million jobs added. So it makes you think, do they just lowball these numbers knowing that the actual numbers are going to beat so aggressively? It almost makes you think there, right? So we got 4.8 million jobs, estimated were 3 million. And the unemployment rate is 11.1%. So we talked about how the worst it was 14.7%. Then it went to 13.3%. And I believe analysts were expecting the unemployment rate to be down 12.2% to 12.2%. So that 11.1% was a very big beat there compared to that 12.2% estimated. So very strong jobs report there. But if we take a look a bit deeper, was it really that strong of a jobs report? I read an article, I think it was on Market Insider today, and I wrote some notes from that article, and I'm going to tell you guys right now. Economists warned that the report only captures data from the first half of June. And honestly, it was only to June 12th. So not really, it was a little bit less than the first half of June. And we know that in the second half of June, the CV cases, they've been spiking, at least in the states that we're kind of lagging at first. We've talked about Florida, Texas, Arizona, so many other states as well. And these states, many states are actually reclosing bars, restaurants. They're pausing the reopening of the economy, and they're actually, rolling back on some of this reopening of the economy. So this could be a bit worrisome heading into the month of July and how the numbers are going to look in the next jobs report, right? And in the last 2 weeks, this kind of touches a bit on what I just said. In the last 2 weeks of the month, the surge in the new virus cases led to more than 19 states. So a lot of states, not just Arizona, Texas, Florida, these 3 or 4 states. It was 19 states and cities rolled back their reopening plans, or they paused their reopening plans. And get this, guys, another pretty interesting stat. Even with the June's job gains of around 5 million, the U.S. is still down about 15 million jobs since the beginning of the crisis, which was about 15 weeks ago. So, needless to say, guys, yeah, we got a very good jobs report number. Most of them were in the leisure and hospitality sector, which I believe it was the same for the May jobs report. But the truth is, the economy in the United States has a long way to go before it gets back to how it was 4 months ago, right? That's the truth. We're still in a big hole, and despite these good numbers, right, the virus is still here. It could still cause havoc. It can still close down businesses, which could then cut more jobs, and then we're going to be in a funky situation at that point, to the point where these numbers could get worse, and then the markets could take a turn to the downside, because we talked about, right? Let's say we get, again, it was 3 million estimated jobs for today, or for June. Let's say that came in at 1 million. It shocked the markets. If that happens in July, the markets could take a dump instead of going up like they did today, and most likely like they will over the next couple of market days. At least that's kind of what I think at this point. Again, like I said a couple minutes ago, I think the bullish momentum is going to continue here. So that's pretty much it. Those are all the notes that I have here on the jobs report, jobless claims. I really advise you guys out there watching to go do more research on your own. Go take a look at the nitty-gritty numbers to see kind of where the jobs were added, where, is it more leisure hospitality here or there. Go do your own research. I always recommend you guys to do that. And when it comes to the Dow Jones here, nothing too crazy. I mean, You can see we closed right around 25,800. This, quite honestly, is a very pivotal point on the chart that we're seeing. We literally closed right at 25,800 as a support, I guess you guys can say, heading into the close of the market and into the long weekend. So it doesn't seem like the bulls, at least, are taking over on the Dow as much as they are on the S&P. Going back to that S&P, you can see we completely broke out of that wedge and out of the big resistance at 3120. But again, the Dow is still at around that big resistance at 25,800. Although we are on it, it can still go either way at this point, and we're still trading right around that 50 SMA, right around the resistance of this wedge. So at this point, for me to be completely bullish on the Dow, I need to see it break out of 25,800, 26,000 and start to make its way, honestly, back into the 26,200 to the 26,300 level. And from there, we might see the fill up to another big level here, which is 27,000 on the Dow Jones. And the NASDAQ, did it hit an all-time high today? Of course it did. Of course it did, guys. Tech stocks doing what tech stocks do best. Other than Netflix and Facebook, they were actually down today. But the NASDAQ hit $10,430 today, all-time high, before selling off into the close. But either way, although we sold off into the close, the uptrend is still intact, no doubt about it. You guys can see on the 5-day, 5-minute, we're at a higher low. We're holding that 180 SMA as a support. This is very good, very good sign for the bulls at least. The bears are kicking themselves, no doubt about it. But like I always say on the channel, guys, don't be a bear or a bull. Don't trade with a bias, because that's how you get burned, right? Try and trade with no emotions. Just look at the chart and trade whatever the chart is telling you. That's what I do. I kick my emotions. I kick my biases out the window. And honestly, that's how I've been successful, trading and doing pretty well during this insane time period that we're in. So watch for the potential pull down. Although the bulls are full-fledged in charge, this thing can still pull down and find some support, maybe at 10,100, maybe at 10,200, before it continues its rally up and maybe even hitting more all-time highs, guys, at this point. I would not be surprised whatsoever. So let me know down below in the comments, what are your thoughts on the markets, the jobs reports, the numbers there, the jobless claims numbers, the future of the market? Are we going higher next week? Are we going to go lower? I'd love to know your thoughts. Let me know down below in the comments section. Now, let's talk about what I personally did today. And quite honestly, today was probably one of the best days that I've had in at least 2 weeks, ever since I had those 2 back-to-back wins with NEO. I think that was like 2-3 weeks ago. I made 12%, 8%. I was just knocking out of the park with that stock. And now it's Workhorse, ticker symbol WKHS. This is by far the hottest stock in the stock market right now. It's no question about it, right? This one went literally from $1 back in March to $22 today. It almost hit $23 today. And if you guys were watching it literally 2 days ago, the stock was at $13. So it's gone from $1 to $20, it pulled down to $13, went back to $23. And for me, I was able to scoop up, and you guys that are in the Discord chat, you know this, which is why I'm telling you guys to get in that platform. A lot of people are in there. It's not just me. A lot of traders, investors talking all day in there, and it's free of charge. Link down below in the description. I called this out, right? And on my Instagram. Make sure to follow me on Instagram at StasserFest and Twitter at StasserFest. I'm trying to be more active on Twitter as well. So we saw this big pull down this morning from 2130, 2150, and you guys know, if you were watching the markets, electric vehicle stocks, they were on fire today. We'll get into Tesla and NEO here in a second, but Workhorse was on fire as well. So we got that 2150 rejection, the pull down to about 1970, 1960. And as we pulled down in 1960, I was telling myself, and honestly, all of pre-market, I was telling myself, okay, if this thing pulls down, I'm definitely going to seriously consider an entry point today. And what happens? The trading gods answered my prayers, right? And we ended up going down again to about 1960. And it was a bit risky, I'm not going to lie, because this stock is very, very, not going to say it's overbought, overinflated, but it's ran so much to the point where it is a bit risky buying here because there's always that risk that it just collapses, right? Like it did the other day where it went from $20 to $13. So there was a lot of risk in this trade, but with stop losses, nothing can get really that bad. I mean, if you set your stop loss at 2%. But anyway, I got in around, let me check my notes here. I think it was a tad bit above $20.10. You guys can see it here. Again, 1970, we popped up. And as I started to see this momentum into the open, I got in again at $20.10. It was literally like 8 minutes before the market opened. And you guys can see what happened at the market open. Was I expecting this? Absolutely not, right? I was looking to get in $20, maybe get out $20.50, make a quick little in and out move. But we got ridiculous volume. We got ridiculous bullish momentum right when the market opened, to the point where it rallied up to $22 in the snap of a finger. And I actually sold out. We actually went up to about $22.20, but I actually put my limit order at $22 and ended up locking it there. So the first move of the day, guys, was literally 5-10 minutes of a trade here. No lie. From 2010 up to $22. That was about a 9 to 10% move here on Workhorse. Again, that was the first move of the day. And I told myself, I'm done. But once I saw Workhorse go up to $23, it saw another big pull down here. I just couldn't resist myself, guys. I bought back in at $21.30. Let me make sure that's correct. Yup, $21.30. I bought a little bit here on the dip. I was down a bit, not going to lie, but I held through the pain here. That was risky, but the risk ended up paying off because you guys can see what happened after that. This thing went right back up. It was pretty much like a V-shaped recovery in the span of about 20 minutes here on the stock, and I ended up exiting, I believe, at $22.50 on that position. Yup, my limit order rather, ended up filling right here, and you guys can see my exit points today were pretty much pinpoint, and it's not always like that. Quite honestly, it's not rarely like that, but a lot of the time, it's not like that. Let's be honest. You don't get these pinpoint exits right before the stock drops, but today was one of those days where, no lie, it was one of those days. I got out at $22.50. That move was, let's take a look. I don't even know myself. It was about 5%. So think about it, guys. I made 10% on the first move, roughly 9-10%, 5% again. So that's 15% just out of Workhorse, and that's all I did for this particular stock. But I also ended up selling out of Papa John's, PZZA. This is one that I bought yesterday. I believe it was more into the low $82 range. I didn't write that down in my notes. I'm kind of forgetting exactly where I got in. But I ended up selling out today as we got closer to that $83, $84 price target, that big resistance here on the 4-hour chart. You guys can see it. So I figured, let me lock this in. Let me take this position in cash heading over the weekend, and that's exactly what I ended up doing here on Papa John's. I believe the move was not even 1.5%, maybe less than 1.5%. And another trade I made today was in Neo stock. This one did very well. We're going to talk about this in a couple of minutes, but Neo went from $9.40. Well, first and foremost, guys, the stock closed at $7.90 yesterday, rallied all the way to $9.40 pre-market, and it took a massive dip to about, $8.80. Right? So from $9.40 to $8.80, that opened up a nice 6%. And I ended up getting in at $8.95 on this little rally here as we started to come back up. And I ended up exiting at $9. Let me make sure here. It was at $9.15. So another pinpoint exit. You guys can't make this up. This is insane. Again, it's not always like this. It's more times than not, it's not like this, right? These perfect exit points once the stock, right before the stock drops. But that's the truth, guys. That's exactly what I ended up doing today. Pretty active day for me. And you guys can see if I held the stock, right? I would have made so much more money if I held it throughout the day. But as always, hindsight is 20/20, and it's not worth beating yourself up if you leave money on the table, right? Although I do beat myself up sometimes, I'll be honest. The best thing to do is to just move forward and focus on the next trade. So let me know down below in the comments, what did you guys do in the markets today? I would love to know. It was absolutely insane. What a crazy day today. Definitely one of the most active days, at least for me here, over the past couple of days. So why did NIO stock run so much? Let's talk about some of these stocks here. NIO ended up delivering, guys, get this, 3,740 vehicles in just June alone, and that is an increase year over year of 180%. That is unbelievable growth there, and that's just for the month of June. If we're looking at the total second quarter here, their deliveries were 10,300, right around 10,300 vehicles, and that is over a 190% increase year over year. So a 20% day for NIO, up to almost $10 here after hours, so well over 20% green in NIO stock. And this is unbelievable, guys. If you watch my channel for at least a year now, I've been in NIO, and I'm not even joking. You guys know this, my long-term supporters. I've been in NIO since the $2 level. I mean, I was buying in the $4 range, $3 range. I mean, I was buying in the $1 range, $2 range. I think my average cost is like $3 or something like that. I have to double check. It's in one of my long-term accounts that I don't really check too often. But yeah, from $3 up to almost $10. It was a spec play. I didn't have too much money in it. I think I had like $2,000. I think I have $2,000 in it. So it's not too crazy of a monetary gain, but going from $3 up to almost $10, I mean, that's taking $2,000 and turning it to what is that? Like $6,000 to $7,000. I mean, that's a pretty good return when you're taking a look, especially for a speculative play. That's a very good return. So NIO is doing very well, and quite honestly, at this point, am I buying more in my long-term account at these levels? No, I'm just riding with what I have. And taking a look at it from a swing perspective, I mean, at this point, we are overbought. RSI is at 82, so it might not be the best time to get in, but I think any opportunity or any dip could be an opportunity. Again, like I saw earlier, I saw the dip on the positive news. There was no reason for me not to buy it as a swing trader, or in this case, it was a day trade. So if I see another dip like this, Monday, Tuesday, like we saw earlier in the day today, I'm going to be taking a look at NIO as an opportunity to get in, maybe as a day trade, short-term swing trade, and make sure to subscribe to the channel to see what I end up doing with NIO and the further analysis for NIO here. And Tesla, guys, oh my goodness, Tesla stock, all-time high at $1,232. They actually delivered 90,650 vehicles in the second quarter, and that absolutely destroyed the estimate of 72,000. And they actually, out of the 90,000 vehicles that they delivered, 75,000 of these were Model 3s. And the funny thing here, guys, oh my goodness, if you guys follow Elon Musk on Twitter, he was trolling so hard. He was trolling the SEC so hard. Not really the SEC, honestly. It was the short sellers, right? And maybe a little bit the SEC as well. But he tweeted out saying, I can't help but laughing at this, guys. Short seller enrichment commission, that's SEC right there, short seller enrichment commission. And he also said, who wears short shorts? So, that's just hilarious. He's trolling, and the reason why he's doing this is because Tesla it was, I'm not too sure if it is anymore. I'm sure it probably still is, but it was one of the most shorted stocks last year, the year before, when it was at $200-$300. People were saying it's going to go to $10, and yeah, that did not happen. It's at $1,200. So if you were buying at $200-$300, you pretty much 5-6 extra money. And the short sellers, they lost everything pretty much. They lost everything they had to cover, which is pushing up the stock even more. If you guys don't know what a short squeeze is, go take a look at what that is. Look it up. It's pretty much where shorts are covering because the stock is going up. And as the shorts are covering their shares, it causes the stock to go up even more and more rapidly and quicker. And you guys know what I'm talking about, especially if you do know what a short squeeze is. So that's what happened really with Tesla and NIO. And we all know at this point, as the second quarter has wrapped up, there's going to be a lot of rebalancing. There's already rebalancing in a lot of these major hedge funds, these major mutual funds, the pension funds that control millions and billions of dollars, right? The people that can actually move the market. So what are they going to do? They're going to end up transitioning out of overweight positions. I'm not sure what these positions are. One can speculate, maybe tech stocks, maybe some of these CV stocks. But what they're going to do is they're going to rotate from those stocks and maybe start going to underweight stocks. I mean, we've seen stocks like the casino stocks, restaurant stocks, the banking stocks even. They've been getting crushed. So these are ones that I'm watching at this point for a potential bounce back play. One of them is Jpmorgan, ticker symbol JPM. And you guys can see about a month ago in the beginning of June, Jpmorgan was trading at $115. Now it's trading at $92. And notice we're holding this trend right here on the 4-hour chart. And that 25-ish share dollar, or rather the $25 drop per share price per share of the stock here, that opened up 17% potential for profit, right? So if we're looking at Jpmorgan here, and it's clearly still downtrending. Yes, you can say it's still downtrending. We're still under major moving averages. We're seeing a bearish cross here, which is the 50 SMA crossing below the 180 SMA. The way that works is pretty much whenever a smaller moving average crosses under a larger moving average, that's a bearish signal, right? So we are seeing this, but again, we're still holding the overall uptrend. So for next week, I want to see these couple of things happen. I want to see a solidified hold on the uptrend. I want to see a break out of $95, and quite honestly, I want to see a break out of both of these moving averages. So I'm looking at Jpmorgan as a buy anywhere from $95, $96, again, as this rotation occurs. And Jpmorgan, quite honestly, is by far, at least in my opinion, the best run bank out there. I mean, we have banks like Wells Fargo, which is not very good. Bank of America is pretty solid, but not as good as Jpmorgan, in my opinion. So we're seeing this massive drop in a very quality bank, right? Very quality bank here that, again, is probably the best bank out there. I'm sure many of you guys will agree to that. So this could end up being a very good bounce back play. And guys, seriously, I'm looking to add money into this. And again, above $95 to $97, especially if we break 98, which was a resistance back in March to the beginning of May. Watch out above, guys. If we break 98 into the hundreds, this thing could rally up 105, 110, no doubt about it. So that's JPM. Another one here is Wynn Resorts, guys, WYNN. This is a high-end, casino out in Vegas, all those. I'm not a big gambler myself, so I've never been there. But yeah, you guys know they're out in Vegas. They're out in, where are they? Where else are they? They're over in Asia. What's that place called? You guys commented down below. You guys know where they are. I'm just forgetting off the top of my head. But yeah, you guys can see very similar to JPM. This one's been slaughtered over the past couple of weeks. Literally a month ago, less than a month ago, Wynn Resorts was at $110. Now it's at $77. And over the past couple of days, we've been seeing a bit of a rally. This thing's been from 67 bucks, now it's 78 bucks, so a $10 per share rally in the past 4 days of trading. So this could be the start of that rally that we're talking about, right? In these, underweight positions. Excuse me, guys. Watch Win Resorts. I'm mostly looking at it above 80 bucks, quite honestly, guys. I want to see it break those resistances from back in March to the beginning of May, that 50 SMA resistance as well. But I think anything above 80, 82 bucks, I can see this thing going to 88 bucks, 95 bucks. That is the target that I have here on Win Resorts. And there's so many other ones, right? Starbucks is another big one I'm watching here for a comeback play as the U.S. economy is starting to come back over these next couple of months. I think Starbucks, being the blue chip company it should no problem be able to get back from where it is now, 74 bucks, back into the mid 80s. I honestly see no issue in Starbucks doing that. And as always, guys, do your own research. Don't buy stocks based off of my opinion. Always do your own research before you do anything in the stock market. These are only my opinions, and you guys know that. Always do your own research. So pretty much that's it, guys. Going over back to Workhorse to wrap up the video. And, we could go on forever and ever here about stocks, guys. But, again, I don't want to, keep too much of your time here. But we can see Workhorse is holding 20 bucks pretty strongly all day, right? 20 bucks was the resistance back in the end of June. We held that after market yesterday, pre-market today. We tested it once, twice, 3 times during the market today and after market. So 20 bucks for Monday is going to be what I'm watching here on Workhorse. If we break $20, guys, another level I'm looking at here on the hourly chart, and you guys can see we tested this when we sold off to about 14 bucks about 2 days ago. When was that? A day or two ago. We might end up going to, let's say, $18 if we break 20. $18 being right on that 50 SMA, that could be the next support where I would heavily consider buying more of the stock or buying a new swing position of the stock. So it can go either way. 18 bucks could be the entry, or 21 bucks could be the entry if we find support or if we solidify this as a further support on Monday and start to rally up from there. So that's pretty much it, guys. Subscribe to the channel as always if you want to see further updates like this. Although the market is closed tomorrow, I'm still planning on making a video and uploading it tomorrow. So stay tuned for that. And if you guys enjoyed this video, hit that like button for me. Consider subscribing to the channel. Like I just said, guys, I said that twice, I just realized. And get your 2 free stocks from Webull. One of them is valued up to $1,400. All you have to do is deposit $100 into the account, and it takes about 5 to 7 business days for your 2 free stocks, your free money, to settle into your account. And that is linked down below in the description box. And yeah, I'll leave you guys at that. I'll catch you all in the next video. Stay safe out there as always. Thanks for watching. Peace out.